LiteFinance, the world of financial freedom.
Hello, it's Monday, 2nd of October, and it is time to start the market forecast for this week. Okay guys, you know the drill. Nothing changes. We will summarize what we have on the calendar for this week and then discuss current fundamentals for USD CHF currency pair. Let's begin with the macro events. So today we already received the final PMIs from the UK, Germany and Eurozone as a whole, which were very weak. So the stagnation in the manufacturing sector continues in Europe. We now have to wait for the data from the US. In the afternoon, we will have a discussion at a roundtable where Jerome Powell will participate, but it is not on the Fed calendar, and I assume it is something naturally less important. On Tuesday, we will get the RBA interest rate decision, where at this time the consensus of analysts predicts no changes. On Wednesday, RBNZ will publish their rate decision, where they too most likely will make no changes. After that, another round of PMIs, this time from the services sector from major economies, namely US and Eurozone, will be published. On Thursday, there is no major event. And on Friday, as it is every month, we will get non-farm payrolls. Okay, now let's move on to and discuss what we can expect on the USD CHF. After the USD CHF rose for 11 days in a row, the longest run since 1975, many have released their bullish forecast. Rabobank drew attention to Swissy overvaluation, while Barclays and Societe Generale pointed to the use of the franc as a funding currency in carry trade operations. Banco Bilbao officials noted that the franc suffered due to the reluctance of the SNB to raise rates in September and predicted its parity against the euro, as well as the USD strengthening to CHF 0.94. So, for a long time, the Swissy was the leader among G10 currencies by a large margin over the US dollar due to the expectations of a recession in the American economy and aggressive monetary restrictions by the SNB. The Swiss National Bank not only raised rates but also actively sold foreign currency. At the end of the second quarter, the regulator reduced its balance sheet by 40.3 billion franc. In January to March, the forecast was 32.2 billion franc. So the SNB used currency interventions to strengthen Swissy in order to protect against imported inflation. However, as a result, consumer prices rose by less than 2% for the third month in a row. This reduces the need for SNB intervention in Forex and increases the risk of continuing the USD CHF rally. So, the main driver of the uptrend was the reduction of investors' fears about a recession in the US economy and the associated rapid increase in treasury yields. Markets immediately remembered the difference between the federal funds rate of 5.5% and the Swiss borrowing cost of 1.75%. This spread has turned the franc into the main sponsor of carry trades operations involving the currencies of developing countries and the G10. The favorable period is ending to the disappointment of the USD CHF bulls. The US economy cannot withstand the Fed's monetary tightening indefinitely, and treasury yields have their own ceiling. So the stabilization of rates on the American debt market against the backdrop of worsening capital problems in Europe and the US is forcing investors to look for a safe haven. Gold, yen and franc now look preferable compared to the greenback. Franc may gain an advantage from the confrontation between Rome and Brussels. Italy raised its budget deficit forecast for 2023 from 4.5% to 5.3% and for 2024 from 3.7 to 4.3% of GDP, saying that EU requirements for this indicator will not be met until 2026. As a result, the yield spread between Italian and German bonds exceeded 200 basis points for the first time since March. The confrontation between Rome and Brussels may not lead to a full-fledged political crisis, but the cooling of the US economy, including due to a government shutdown, can trigger a correction not only in the yield of treasuries but also in the USD CHF. So in this regard, a breakout of the support at 0.9095 will allow us to enter into short trades. Okay, that will be all from my side, guys. Thank you for watching, and till next week.